Good morning, members, and welcome to the TurtleFollower.com, where we teach you how to stop predicting and start reacting to market conditions. I hope you guys enjoyed your week. We're going to take a look at the portfolio for Saturday, December 5th, 2015. If you're not a member and you're watching this on Twitter or YouTube, please note that you are receiving this information about a month after it is distributed to members. If you want to get real-time updates, you need to sign up for a membership at theturtlefollower.com under the memberships tab. As far as our portfolio goes, we've had a very good week, even though the market kind of bounced around. Let's take a quick look at the S&P. We went over the futures in the stock market outlook video from this morning, but you can see here, just looking at the S&P, we've now basically taken back all of the move from Thursday, trading back above those highs and close to a potential breakout. So I went over that in more detail in the stock market outlook video at the top of the post. But as far as I'm concerned, market seems to be setting up for a continued move higher. This is one of the reasons I didn't want to go ahead and put on a bunch of short trades come Thursday. We had a few that set up, but I said, you know what, let's wait and see how this digests. Sure enough, the market, I had no idea, but the market had a huge day on Friday. S&P was up 42 points. The Dow was up almost 370 points. All right, so up just across the board. And that kind of sets us up now for adding some strength to the market and adding a few more long positions to the market. So first, let's take a look at the portfolio, the trading account portfolio, and then we'll go into our core account. All right, so we did exit a bunch of trades on the second and third. All right, you can see those highlight here: Tesoro, EW, Travelers, GT, Visa, PSA, Altria, Masco, and Vulcan Materials. All right, so you can head on over to the model portfolio tab to get more detail on these. But essentially, in those 8 exits that we made, we took about a $410 loss on the portfolio. So not horrible, not great. But at the same time, we didn't know that the market was obviously going to rebound. So we took our exits and we followed our process. That frees up some cash now for us to go ahead and put it into trades that maybe are working. All right, and you can see that we are going to be adding 4 positions to the portfolio, potentially maybe a 5th position in BDX, which we'll go over in a minute. Now, full disclosure here, before we go any further, we're adding these to the trading account because the core account is basically done. All right, the core account, we are at 80. That should actually say 90%. We're actually about 90% allocated in the core account, so we're not going to be able to add any more positions to that, but we are going to take those same positions that we would potentially add to the core account and add them to the trading account. So if you're a core account member, or if you're trading based on the core account, just note that what I'm going to go over in these next 10 minutes, you could potentially also add to your core account. It's the same setup, and you could do that account just as well. All right, so let's take a look at these trades, but for right now, just note we are up $507 in the portfolio. Performance-wise, if we look at the trading account, okay, you can see that we have had a little bit of a dip, but nothing out of the ordinary, just a little bit of a sideways move, up $546 for the year. And just note we just started this starting in November, so this is one that we've now integrated into the model portfolio. And while we're here, the core account, you can see that you are, over the last 18 months, outperforming the S&P, which is exactly where we want to be. Didn't have this big drawdown. We were able to flatten out and now keep our money for a potential move higher. And that's exactly what you want to do. All right, when there's these periods of large drawdowns, the whole intent is capital preservation. You're not trying to make money, capital preservation, especially for a core account, because you want to always be able to allocate it. Core accounts, you have a 10, 15 year time horizon. It's a retirement account, a kid's account, whatever it is. You want to just be able to preserve that capital and redeploy it when market conditions are better. Trading account, you're trying to make money all the time. All right, so let's jump on into our positions, and we will go through the new trades as well as the old trades as we go through this. All right, so ACE, this is a new trade that we're going to be placing. All right, we're going to be looking at, let me just take these orders, actually leave them on. All right, so this is one that we're going to be looking at from a trading perspective, and here you can see breaking out over that 116 area along a uptrend line. All right, very simple, breaking out not only from a weekly but a daily consolidation. You can see that weekly consolidation right there. All right, so again, this is one that you could take for either your core account or your trading account. Trading account position, I'm using Thursday's low as my exit point. You can see that stop is right in here around 113. If I was taking it from a trading perspective, my stop would be a little lower, around 111 or so. Okay. Other than that, pretty much straightforward. We're using 0.5% risk. And the reason you're seeing some different numbers on my screen versus what's in the portfolio is I don't have the same account value as what you are seeing with the portfolio. All right, so that's the only reason you'd see that. But essentially what we're doing here, we're setting an order to buy it at the market. All right, and then once that triggers, it will set an OCO order, one cancels other, for a stop below the low and for a limit order to our from where we enter. All right, so it's basically just my gauge to make sure I'm not being too piggish on any of these trades. Another one to the short side that we're adding, APC. Okay, and you can see what's happening here in APC is that we are trending downward. Okay, we have been for some time, and now it looks like potentially we're getting a breakdown from this range. So you know, very similar situation. I wouldn't take this one in a core account, obviously, because it's a short trade. But looking at it from a trading perspective, we traded below the 57.50 area. All right, closed below it along a weekly downtrend and out of a weekly consolidation. Okay, so here's that weekly consolidation, weekly downtrend in place. All right, very simple, straightforward, short trade. We'll see if it works. ATI. This is one that we're in. All right, it hasn't really been working out too well for us, but we're still in the trade. I'm looking for it to basically close below that 13 level and continue to stay below it. You can see even on a day where the market was up 37 points, ATI was breaking down. All right, so that's a good sign for our short trade. What I'm looking at here is this potential box as another level that we would want to see breached. Okay, you can see if we just adjust some stuff, you can see that level right here. Right now we're using, again, the 1385 area. If you're aggressive and want to, you could trail stop 1325. I'm just going to let this kind of play out here. Hopefully we get a breakdown from the box and just stair step them down like we like to do. All right, again, you know, from a trading perspective, I like to just see, we'll just pull up the perfect example. I like to just see stair steps higher. All right, boxes, 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 and it just continues to run. So try not to time where you're going to exit, and if you can, just, you know, let her run. So this was a nice trade in Nvidia. Unfortunately, we got stopped out a little early on that trade, but needless to say, good trade and good example of why you want to let stocks just run. All right. Here we are with CAR, C-A-R, and again, just letting it run. You can see it's moving down, moving down. I'm looking for it to consolidate at some point, and then make another box, and then break down again from that box. But we are coming into a key support area right around that 34.50 area, so just keep an eye on that. But right here, right now, CAR looks good. Want to see a little bit of a consolidation to trail that stop lower. If you're aggressive, trail it to the previous day's low or high. That's what we're doing here in CAR. I'm sorry, in COG. This is one that just continued to run lower and lower. All right, so again, you know, we had a little bit of a pop on Friday. Nothing unexpected. Let's see how this reacts. It didn't take out the previous day's high, and it didn't really even get back to halfway in the range. Let's make it bigger. Halfway in the range. So, for right now, just stay short. Costco. Costco continues to work. All right, you can see these boxes that we were talking about. Finally got another one. Trailed stop up. And until that level gets taken out, we'll just stay long the stock. And hopefully it sets up again. Remember, Costco did report earnings earlier than expected. So we stayed in this one. The earnings on the 8th, not accurate on the platform here. Google, similar situation to Costco, had a breakout, pullback, breakout again. Just looking for it to consolidate and start running higher. Stop is in place right around 736.50. LUV, another new trade for us. All right, breaking out to the upside. Again, this is one you could potentially add to your core account as well. But a stop right here under the lows, 44.50, entering right around 49.50. And, not a big position, but a nice size position to just get us started. And you can see it's a breakout from a weekly and daily consolidation, and it's a long an uptrend. Okay, so very nice setup there in LUV. All the airlines been acting very well of late, so good to see that one kind of taking off. Here, McDonald's, another new trade for us. Again, looking at a potential entry point right around 116. Stop is going to be right around 112.50. Again, if you wanted to be long this in your core account, my initial stop would be right around 109. All right, let that one just work. But you can see McDonald's, huge consolidation, almost for about 2 years. Breaking out, all right, and again, breakout on earnings, consolidated and digested that earnings move. Now breaking out again, that's when we want to look to enter those trades. Monster Beverage, all right, has had a move out of consolidation. That's what got us in the trade. Went sideways for a few days. Now here we are again, and we are trading in a larger box or a smaller box. And then now looking for a breakout over 158.30. I moved stop up to Thursday's low. I'm considering that to be the bottom of the box at this point. If we break down below that, then it's probably a good time to get out of the trade because we've broken trend line. We've broken some key support areas, and we'll just find a new trade. Microsoft, all right, this is one that we're in for the trading account. Again, had the breakout on the 1st. That's what got us in the trade. All right, we entered it on the 2nd. Had the big down day on the 3rd, 4th. Now we're all of a sudden back at new highs. And again, just let these things work. All right, there's no reason to kind of rush this. Just the whole thing from a trading perspective is you want to be able to draw boxes and lines. If you can draw boxes and lines, you can be successful at doing this, and that's all you have to do. All right, so that's how I like to trade them. Draw a box, I draw a line. If it breaks the line or the box, I'm out. Okay. NVS. All right, again, downtrend, broke down. Here was our entry point on the 30th, and now back trading inside the box. So this is one that may want to go back and test the trend line. That's fine. All right. Ultimately, we're in the trade. We're going to see where it goes. Stop sitting right around $89. OGE up a little bit as well. Had this big pullback or big breakdown. All right. Again, big box, little box. I'm just trying to figure out where I can draw the next box. Once I figure that out, I could pull the stop down and put it right at the top of the box. If we go ahead and now start breaking the downtrend line, then I'll look for a way to get out of it. All right, I want it to stay below those downtrend lines. Those trend lines are important. Making sure that it's continuing to trend in the right direction. All right, if we start breaking trend lines, then we have a little bit of an issue. All right, but POT, this was another new entry that we made to the short side. Again, traded down on Friday when the market was up so much. Great to see that. And here you can see the 50-day moving average in play. We also at that point talked about CPN. That went out to the free members. That was a good trade, and it's worked out very well. And SE another good one. So of course, my luck, I picked the one that performed the least out of the three to put in my portfolio and your portfolio, but that's just how it is. I just didn't like the setups as much as I liked Potash, but hopefully at some point we'll be able to get that one going. So that's one of the reasons that you kind of, if I put it out, for free members versus premium members, not necessarily that's a bad thing for you to put in your portfolio, and that's one of the reasons that if it sets up, you never know what's going to happen. All right, look at KMI. This is one that we were in, we got out of for a nice little profit, and sure enough, look at the last 4 days. I mean, huge down days. It lost almost 30% in the last 3 days. Nobody knows that's going to happen. So again, this is where you want to just stay in your trade as long as possible. And this one we got stopped out of a little prematurely when we saw this hammer. We got moved back above, but ultimately look at what happened. It made a box. It broke the box, and we would have been in the trade still. Had our stop here, 24.69, and with this move, you better believe I'm taking most of that profit. For a trading perspective, my stop probably would have been, almost midway on this bar, maybe 17.80 or so. So we would have picked up a nice gain on that one. And again, just one of the reasons that you just trade what you can and put as many as you possibly can in your portfolio, because you never know which ones are going to be the big winners. All right, here we are, stars. Again, consolation brands. You can see breaking out to new highs, move, stop up. Very simple. The only other one I want to look at is BDX. I came across this one when I was doing the watch list for the core account. This is one that's working out very nicely. You could see here, trend line to the upside, stop level in place right around, let's call it 147.83, trading 154.81, breaking out of a weekly consolidation as well. All right, you can see that right through there. All right, so a nice big long weekly consolidation. So this is one I'm probably going to add to as well. I'll put that one in the portfolio, and we'll just see how that one plays out. So that'll be 5 new positions. All right, so that'll be APC. Also, it'll be long, ACE, LUV, McDonald's, and there's one more. No, I'm sorry. Let's try that again. Long, ACE, LUV, MCD, and BDX are going to be long trades. APC to the short side. So we're adding 5 new trades to the portfolio for this week. And again, that should bring us, if we take a look back at that trading account, that should bring us, pretty much where we want to be, weighted a little bit more heavily in healthcare. And you can see here, the discretionary and technology we're heavy in, and we'll play it by ear, but I think those will be some nice additions to the portfolio, and we'll see how that plays out. So let's take a look at the core account now. Switch this over to the core and close this. We'll close this, and we'll open the weekly watch list. All right, so first things first, let's go through the positions we're in. We're in about 13 positions in the portfolio. All right. And let's sort them by name. All right, there we are. So we'll take a look at those, and then we'll take a look at some new additions to the watch list as well. First, position-wise, Clorox. We're up 1.7%. This is one we just entered on. I'll tell you exactly when we just entered it. Clorox, we entered on the 2nd. And while we're still on this page, let's just take a quick look at the actual numbers, because again, these are a little bit different than what we're showing on my account. But right now, pretty amazingly, every one of our positions is in the green. All right, so everyone's doing well. And really not much more to ask for. Up $2,900 so far, open profit. We're down $3,100 for the year, $3,200. So from a trading perspective, think about what we did. All right, we avoided that big drawdown in August. All right, let's take a look at that. We avoided that big drawdown in August. We're close to trading above, positive for the year. The S&P is up about 2% for the year, but we are not. We're down about 0.25%. Honestly, that's not a big deal to me. A percent and 1.75%, not a huge deal over the long run, because the fact is, I look at this as a successful year because we avoided this big drawdown, and that's what I want to point out. We could have been down, 5, 6, 7% on the year, but we didn't. We avoided that drawdown, and we got out at the right times. It didn't feel like it at the time because the market rebounded quickly against us. And honestly, that's probably one of the reasons that we're underperforming, is because we weren't involved with the market as it rebounded. But I wanted to make sure that we preserve capital before worrying about gaining more money on the account. So that's one of the things you have to be aware of. It's just certain times to do certain things. And I consider this to be a successful year just because we didn't go ahead and have experienced that large drawdown. So look at where we were before the account. Before that little crash, we were up 11.92, and we went down to 4.57. All right, and that's since July of 2014. But so we gave back about 7%, and the market gave back about the same. All right, so but we still managed to stay positive, and we are now in good positions. All right, so account value 106,732. And again, going back to those positions, lots of nice positions. Biggest winners so far: TSS up 14.5%, and TSN up about 12%. Okay, so let's go back. Let's take a look at these positions. Clorox, very simple breakout from a daily consolidation along an uptrend. Weekly chart looking good. Stop in place 120. All right, just leave it there. Let it work. DPS looks like we're gonna have a dividend on the 10th, so we'll get that dividend in play. But again, nice breakout, nice move on Friday, back to new highs. Everything you want to see. Stop in place below trend line, below 50-day moving average, and below previous support level. Perfect. Fiserv, all right, came back, tested that 50-day moving average. Right now, what I'm looking for is a stronger bounce, maybe back to the top of the range, and eventually I want to see it break this box. Then that'll give us our next stop level here, around $93. All right, but right now looking good from a long-term perspective. Home Depot had a big pullback on Thursday. All of a sudden, almost back to new highs. This is one that's starting to run on us a little bit. So we may have to adjust our stops a little bit more accordingly, because we don't want to leave too much in between, where our stop is and where our trade is. But right now, you can see 134.50 is where Home Depot is trading, and 118.50 is where the stop is. All right, next one, LB. All right, again, consolidated right above that 50-day moving average. Had a nice breakout here. So this is one that we'll keep an eye on. Okay, we'll see how it reacts. I would say at this point, we're going to probably want to trail that stop up. Okay, if we can get that 50-day moving average to start trending higher, you can see here's the trend line. I would say that we're probably going to want to move our stop up to around the 94.50 area, right below that little consolidation, because then that puts the 50-day, the trend line, and those lows that all need to be broken before we would get stopped out of the trade. But for right now, let's just wait for that 50-day moving average to start trending higher. Here you can see Lockheed Martin. This is one that we were looking for to take out the previous day's high, and then we would have moved stop. It didn't do it. So right now, not necessarily a swing low, but pretty darn close. Let's see how it reacts the next couple days. Trend line's a little bit lower. All right, but 50-day moving average has been the key support area. So this is where we're looking to trail stop to. Okay, looking to trail to 215 about, but just not yet. All right, Altria, just now we got stopped out on our trading account. Now it's breaking out for our long-term account, and here we are. All right, breaking this downtrend line, which is a great sign. Let's remove these. Clean this up a little bit, because we are only in it from a long-term perspective now. Okay, and that's what you got. Let it just work. NOC. All right, similar to Lockheed Martin. This is what I was looking for in Lockheed Martin. Was that nice breakout, move back above the highs from the previous day. Again, looking for it to move higher and break that 190 area, and then we can trail stop up. PSA. All right, just very much consolidating right up in here along this big uptrend line. So again, just kind of keep an eye on these. If we can start getting breakouts out of these boxes, then we're going to be aggressive with it, because I don't want to leave a lot of room between the current price and the stop. All right, right now we're almost $20, almost a 10% move before we would get stopped out of this. It's a little bit too much for me. Starbucks. All right, nice big reversal off that support area around 59, and the trend line stop is in place in an almost perfect position. Stanley Black & Decker, this is a new one that we entered. You can see it consolidated, pulled back, tested that breakout level on Thursday, and now back almost trading at new highs. So for right now, just leave the stop in place. Tyson Foods, all right, this is one that, you know, at some point we're going to just take this off. I mean, it's going to be to the point where we're going to almost start trailing to a previous day's low or something along those lines, because I could see what's going to happen here. It's going to continue to go and continue to go, and all of a sudden you're going to get a candle that takes out about 8 days of trading. So Tyson, we're going to be very aggressive with this, and you know, let's leave it for now. I would say if we want to be aggressive, somewhat aggressive, we could probably trail to here, which would be around 49.50. All right, that was really the last big pullback. If you want to be really, really aggressive, I would be putting my stop right here around 51 or so. So let's see how it reacts the next couple days. But as I said, I think this is one that we've made a nice profit on. Let's see what we can get as far as taking that off the table. TSS. All right, different situations, run, but now look, it's consolidating. Liking that consolidation. 50-day moving average way down here. All right, so let's just see how this performs. But needless to say, good looking position. All of our positions, great. I mean, nothing really wrong with any of them. So hopefully they just continue to run, and that's the whole point of this. All right, ACE. Let's go to the watch list. ACE we talked about. We talked about making that, putting that in a core position as well, and there you can see the setup. All right, Aflac, another new one to the list. All right, what I'm looking at in Aflac, support area around there, resistance around 66, and there's your consolidation right in between them. Okay, from a weekly perspective, you can see that we are essentially consolidating. All right, besides this big pullback, and if you want to include that, you can. All right, because it pretty much coincides with the lows for the year. All right, you can just keep taking it back, keep taking it back. I mean, look at Aflac. All right, so the only thing I would be concerned about with Aflac, if we get that breakout over 66, we're going to have some resistance right there around 67. But other than that, good looking setup right there. AIZ has been on a tear. This is one that setting up very nicely for a continued move higher. Okay, you can see the weekly chart is just continued to run out of this breakout. All right, so it broke out of this long-term consolidation, came up, and now it's just very nicely running. If we were going to take this one, I would say stop would be, I'm in the wrong thing. Stop would be right around 81, and you know, breakout area around 87. All right, so we'll just keep that one on the list. BDX, all right, we talked about. This is one I wouldn't necessarily put in a core position just yet because of the distance between the 50-day and the current trading price. All right, this one's going in the trading account as we discussed earlier. CINF. All right, another new one to the list. Keep this one on your radar. Again, the longer this goes sideways, the closer it's going to get to that 50-day moving average. But this one looking like it wants to take a nice move higher. And you can see it's already broken out of a weekly consolidation. This is the first time it's consolidated after that breakout. All right, so a breakout over 61.50. and a breakdown under 59.50 is really what we're looking for. CPB, this is a sloppy one. Let's actually just remove all these drawings. This is, one we've talked about. This is almost one you need to squint at a little bit, but it has broken out of the daily. I didn't take it because the reason was the stop was way too wide for me. It was over 10%. So what I'm looking for here, and this is more just a placeholder, is I wanted to see what happens now. Does it consolidate for a month and let this 50-day moving average catch up? Does it continue to break out? Does it set up again on the daily chart? Right now, it's not my favorite trade, but it's there just to, not forget about it. Honeywell. All right, Honeywell consolidating right above the 50-day moving average. You can see we are still in a weekly consolidation for Honeywell, but we are close to a breakout. So let's see how this reacts. Those levels, I would say, because we're looking for it to break out of the weekly as well, we're probably looking at 107 with a stop somewhere around the $100 level. All right, I wouldn't necessarily use these highs. I'd just look for a breakout over that 107 to new highs. J&J, all right, again, similar situation. Was trading below the 50, below the 200, now trading above the 200 on the weekly charts. All right, so this is one that's just setting up for maybe a reversal play to the upside. Here's a nice tight consolidation. And again, because we're looking for it to really break out, I would probably say your stop or your entry wants to be somewhere over the 105 area, and the stop down here around 99.50. So, just because we're breaking out of these more the shorter term consolidation doesn't mean that's where I want to take my entry. Okay, I'd rather miss out on a few points and take it on a true breakout than worry about it going up $3 and then getting stopped out. Exact same situation here for JPM. All right, trading right now 67. You can see that nice tight consolidation on the daily chart, but ultimately I would want to see it break out over 70, and then we'll see what happens. It may not be a trade at that point. Maybe the stop is too wide, but just have it on the list and see how it reacts in the next few days. Coca-Cola, all right, big weekly consolidation here. Okay, again, similar situation. There you go. There's your breakout. This one has a little bit of room between the highs. All right, so probably looking at a 43.70 and 41, and then that'll give us room up to this 45 area. McDonald's, this is one we talked about. I'm leaving it on the list because it didn't set up from a it did set up from a core account perspective as well. So if you have room in your core account, definitely one I would look to add. Microsoft, similar situation. All right, on the list because it only set up on the daily, on the trading account. All right, stop is a little too wide. It's above the 50-day moving average. So I would just see if this one sets up again on the for a core account position. But for right now, it's just a trading position. TXN, another new one. This one's setting up very well for a continued move higher. Stop would be around 55.50, entry around 59.50, and there you can see that nice consolidation, and that's happening right at the highs essentially. Okay, so had this little, it's a cup and handle essentially. So pull back, rounded bottom, nice move higher. So there's your cup, and then here's your handle. The handle is essentially what we're trading in right now. That's a great move or great setup for TXN. And finally, Valero. All right, nice weekly consolidation, trading right above that consolidation on the daily chart, looking for a nice breakout. And you can see here, 74 is the breakout level, 68 is the stop level. All right, so those are the new additions to the watch list. Everything else still maintains. There's a lot of trades that are setting up. Fortunately, there's a lot of trades. Only so much capital will go around. So for right now, we'll play it by ear. But all in all, looking very nicely, looking very well, and we'll go from there. All right. So any questions or comments, please let me know. Again, if you're watching this on anything else but the website, Twitter, YouTube, wherever you may be watching this, please note you are receiving this about 30 days after it's distributed to members. If you want to get real-time updates for these real-time trades, you need to sign up for a membership at theturtlefollower.com and join us in the members area. Other than that, have a great rest of the weekend, and we'll catch you soon. Take care.